In order to be an effective investor, you need to start by understanding where your investments come from. Stocks in the U.S. trade on two major markets, the New York Stock Exchange, or NYSE, and the NASDAQ. NASDAQ was an acronym for National Association of Securities Dealers Automated Quotations, but that's kind of a mouthful, so today everybody just calls it the NASDAQ. The NASDAQ is referred to as an over-the-counter or OTC exchange because there's no physical meeting place where stocks are traded. NASDAQ is just an electronic system of matching buyers of stocks with sellers of stocks. In contrast, the NYSE is a physical location. It's a building on Wall Street in New York City, and historically, stocks were physically traded in that building. Today, of course, the NYSE has electronic trading just like the NASDAQ does. The NYSE tends to be the more traditional exchange. The companies listed on the NYSE tend to, on average, be a little larger, older, more stable kind of traditional firms. Think General Electric, Procter & Gamble, or Coca-Cola. Now, the term listed means that those stocks trade on the exchange and buyers and sellers of that stock go through the exchange. The NASDAQ has historically been more of a tech-focused exchange, with firms like Google and Amazon listed there. Of course, these days the two exchanges are largely interchangeable for firms, and they compete heavily. So sometimes tech companies list on the NYSE, and traditional firms list on the NASDAQ. Outside of stocks, there are other major exchanges, like the Chicago Mercantile Exchange, or CME, the Chicago Board Options Exchange, or CBOE, and the NYMEX, or New York Mercantile Exchange, that enable investors to trade other types of investments, such as stock options, commodities, and currencies. Now, interestingly, the other major type of investments besides stocks are bonds. These bonds are a form of debt that companies sell to investors in exchange for the investor receiving a type of interest payment over time. But while stocks trade on the exchanges, bonds are mostly traded directly from investor to investor, with big banks helping to facilitate such trades. Now, at this point, you should be able to identify and explain the different types of exchanges in the U.S. capital markets. As you move forward with your investments, pay attention to what exchange your investments trade on and what types of investments you are holding.